the webinar today. I'm a research fellow at the Institute of Development Studies, and I lead the research component of the BEAM Exchange, which hopefully you all know is a knowledge sharing and learning platform about the role of market systems in reducing poverty and how this can be done more effectively. And for the webinar today, we'll be sharing the learning from two pieces of work that BEAM has supported, focused, I think, on some of the more difficult and challenging questions related to the design and implementation of market systems programs. And just to say briefly, the research that BEAM has supported across the last 3 years has really been about encouraging better decision making, trying to support new ideas, and also strengthen the credibility of market systems approaches. We've really emphasized the co-creation of this knowledge with practitioners and how we can better link ideas from theory or from other fields to the practical experiences within market systems programs in order to draw out insights that are relevant for donors and for program implementers as well as other interested parties. I should say all our research is available on the BEAM website, and hopefully Sarah, is putting a link in to where you can find that research, including the two pieces that are being presented today. So to move to today's webinar, Mark and James will be, as I said, presenting findings from two pieces of this research, which together look at how practitioners use analysis in order to design interventions, and the relationship as well between the quality of this analysis and the ability to achieve successful impact at scale. Mark Thomas is a managing director of Nathan Associates London office. He's been working in international development for over 3 decades, so brings a wealth of experience, primarily on smallholder agriculture and market systems, but also covering other private sector development initiatives. James Blewett is a private sector development expert and a practice leader at Maxwell Stamp, and he was the senior research advisor on this on the project that he'll be presenting. I'd also like to mention we're joined, I think, joined on the webinar by James Keddy, who was also involved. In fact, he led the research that James Blewett will be presenting. James Keddy is a very experienced market systems practitioner and evaluator, and we'll also perhaps have a chance, if there are some particular questions that are more relevant for James Keddy, we'll sort of get his input through the chat box, but trying to limit the number of presenters today. And finally, I also want to introduce Bill Grant, who will be sharing his reflections after the two presenters have spoken, really from a deep practitioner perspective before we open the floor for a kind of broader Q&A. And Bill Grant is a global practice leader for market systems development at DAI, based in London, and has carried out an enormous number of subsector and value chain analyses over the last 27 years, often leading on design and implementation, so really deeply experienced in the sort of issues we're covering today. He's currently providing senior technical advisory services to market systems projects in 7 countries across Africa and the Middle East. Just finally, before I turn over to our first presenter, maybe just a couple of lines about where this research comes from. I mean, I think we all agree that at the heart of market systems development is the aim of leaving behind systems that work better for the poor, and that the approach can be contrasted to what one writer has called impulsive interventions, the sort that result in limited outreach, impact, or sustainability. But the challenge, as we all know, is that achieving the type of long-lasting and large-scale results that are at the heart of the market systems approach is easier said than done. And so what I hope we'll be covering in the webinar today is better understanding first about how we actually effectively analyze the system and then translate that to action without suffering from the so-called paralysis by analysis, or on the other hand, rushing into interventions. And Mark will very much be speaking to that around how practitioners are actually going about the design of interventions and the sort of factors that influence this process. On the other hand, there's, I think, been a concern that I've certainly heard expressed from within the market systems community that we are still collectively not delivering on the ambition of achieving impact at scale, that we have a reasonable story to tell in terms of successful pilots, but it's been much more challenging to move from successful pilots to impact at scale. And so James's presentation will tackle this challenge head on, starting from the perspective that market systems projects often include interventions that seek to facilitate business innovation, to generate new business models for producing, aggregating, or distributing goods, for example. And the research looks at the degree to which market systems programs are undertaking the sort of pre-pilot analysis that would be in line with that used in the commercial investment industry, and whether there's a relationship between the existence and rigor of this analysis and the ability to actually achieve these impacts at scale. Before I turn over to Mark, I just want to say a few practical points. Firstly, the webinar finishes at 1/4 the next hour, depending what time zone you're in. So it'll be in 1 hour and 9 minutes. So we have a session at the end for discussion, but please feel free to add your questions in the chat box as they come into your head, either clarification questions on the presentations or broader doubts and questions that you have. Don't wait to the end of the presentations, but just put them in, and I'll play a role when we come to the discussion of trying to collect and just direct them to the appropriate speakers. And we will share links of the relevant documents that are mentioned in the chat box as we go along. I hope that sort of covers everything for introduction, and I would therefore pass over to Mark Thomas to make the first presentation.
Okay, thank you very much, Jodie. And continuing the thank yous, I'd like to thank all of you who have joined in today to participate in this webinar, and I also want to thank Beam for funding with DFID's money this piece of research, and my co-authors Max Schultz and Katie Clancy, who are probably amongst the participants somewhere. So without further ado, this was a very interesting exercise that we undertook, based essentially on talking to you, talking to the people who actually have to implement as practitioners market systems programs. We wanted to focus on this difficult point where, if you like, where the rubber hits the road, where the analysis has been done and we have to work out what to do. And we wanted to really try and understand how do people do that? How do they work out what to do? Of course, we all know that it's so much easier to understand the problems and the market failures and all the things that don't work than it is to actually come up with the solutions. And in market systems programs, you have this additional factor that when you actually come to do something, you need to do it with market actors, and you need to work with the organizations that are there on the ground, and that their own willingness and capacity comes into that whole decision-making process on what to do. So our idea was to try and engage with you, the practitioners, to see how you do this, and then to come up with some practical guidance out of that, and some lessons learned both for practitioners and for donors. We talked to 61 people. We continued the discussion with various e-discussions through Beam and with some follow-up interviews, and of course with the people in Beam themselves. So the first thing that we've done when we've tried to bring it all together and present this in a logical way is to identify that the context and what we've called modalities and resources are absolutely, central in defining the process of design that happens. So for the context, none of us would dispute that. The economic environment that you're in, the political environment, the particular market and sector that you want to work in, and the extent of the constraints and problems within that market, and the actors, how many are there, what's their capability, how interested are they. This is the space you're dealing with. But we also got a lot of practitioners talking about the modalities and resources. So this ranged from, how much resource was available, how much, what was the time frame, did you have enough time, did the funding agency give preset targets that were going to be, put a lot of pressure on you to design something quickly, get going quickly, how much flexibility was there, and of course, what sort of facilitation instruments were you allowed to use for your program? Are you only allowed to, facilitate in an indirect way? Do you have cash? Do you have money? Can you share risk? Can you have a challenge fund? Can you provide TA? All these modalities are also obviously going to affect the way you design a program. And on top of that, the team. We all have our own ideas about how to do market systems, and we put together a team in a program, and that the very nature of that team and how they gel together will also have an impact on the design process. So those came out very clearly, and there was quite a lot of discussion about that with our respondents. And we get through to the interventions eventually. But what I want to focus more on is the process, because here we got a lot of surprises and a lot of very, very different approaches to the actual process of design. And this is what has given us a lot of food for thought and a lot of discussion. And this diagram here is our best effort to try and capture what emerged from this. So I think our expectation before we started the research was that it was a pretty linear process. It was a step-by-step. You did the analysis, you worked out what the problems were, you then design your interventions, then you implement them, and then you solve the problem. But actually, what we were told was that it's really not like that at all. And so we've distilled all of this, and we've come to the conclusion that there's a sort of continuum of processes to design interventions. And if you like, there's a sort of extreme approach represented by the left-hand side and the right-hand side of this diagram. So the left-hand side is when it's very much based on analysis, and it's very much expert-led. There's not so much engagement with the market actors as partners until you get further down. It's right from the beginning, it's clearly targeted on systemic constraints. And then when you get down to the bottom, you go through the process of your implementation to achieve your systemic change. The extreme right-hand side is quite different. And in the most extreme example, there is very little analysis done. There may be a view that it's too complicated or too dynamic or too difficult to really understand. So the idea is to do something and see what happens. And on the extreme, that doing something may be driven by an opportunity, a partner who wants to do something, who has an idea, and you think, okay, we'll test it and design that. And then it's a much more participatory approach, and there's a lot more engagement, a lot more empowerment, if you like, of the people, the market actors from the beginning. It has a much more focus on finding a kind of leverage point to get started, to get into the system. and then we proceed on. So our overall feedback and observation from the participants was that more people are moving towards the exploratory side than the purely analytical side, and that makes an interesting set of processes. So, when you dig down into what that means, we had a lot of debate within our team and with Beam about how best to describe this, because there are many ways of being exploratory. As I said, you could be very much opportunistic and really be driven by what your market actors are interested in doing, or you can be much more scientific and experimental in your approach and use that opportunity to explore to really test some clear hypothesis and work through that and move forward that way. So I think that it was difficult to come to any clear conclusions about exactly where our industry lies on this continuum, and maybe that's not necessarily a requirement that everybody sticks to one approach. So when we moved on to think about guidance, we say here, select the best approach, which is fairly obvious, and that requires some thinking about some of these issues. So we have here 5 issues that we discuss in the paper. One is this what we're calling the obfuscation of these different exploratory methods. And I don't want to say, which one is right and which one is wrong, but I do think it's very, very important that we're all very clear exactly what we're doing and where it's going to lead us. And whichever exploratory approach one decides to undertake, I think it's very important that the end is there. The vision is there in the end as to how that is going to lead to, the bigger picture changes that you want to do. The second is the advantage, speaking as an economist, of relating what you're doing to the economic theory around market failures. I think that we had very little feedback from practitioners talking about market failures the way economists do, in terms of, information failures, government failures, coordination failures, and so on. I think that can be a very useful tool to use to help deal with complexity and to understand that even if you don't know the detail of how your market is working to the extent that you would like, you can be fairly sure that if you've identified, for example, that coordination is a huge issue in the market, if you tackle that and address it, then you're likely to achieve some systemic gain. The third issue was the overall theories of change. Very few people were really talking about their theories of change and being clear that part of the design process was to achieve a systemic change through some kind of results chain process. And I think that is something we can all use one way or another. Now, the fourth issue was around participatory methods. People talked about participation and getting people to participate, but it wasn't clear often whether that meant just to engage them or use their services, or really participate with them using a methodology that would be valid for if scrutinized in terms of actually capturing the views of the group. So, for example, there were risks, I think, that a workshop would be held and people would speak in a workshop, and then that would be taken as the view of the market actors. And then the fifth one there is the selection of the instruments you're going to use in your intervention. There was very little relation back to us of using the right tool for the right situation. We found that a lot of people felt that in their particular project, they were going to do whatever it was, matching grants, or they were going to have workshops, or they were going to do trainings, or they were going to offer TA. But it didn't seem to relate to the actual needs of the market actors, or even necessarily to the analysis that they had undertaken. So I think I'm running out of time, but those 5 insights are what we pulled out and wrote about in the report. For the donors, very briefly, key for them is the modalities, and to think carefully. A lot of practitioners came back to us saying that they were constrained by the modalities imposed on them by the program. So predetermining the intervention methods or the facilitation instruments that are allowed to be used will obviously limit the program. Very tight timetables for inception or very tight timetables for program targets will also tend to distort what is done to achieve those targets. And of course, the flexibility, the way the size of the resource envelope and the way it's allowed to be used will also have a big effect on what people do. People will respond to the conditions that they face. So very briefly, that is the key points that came out from this research. And I think my time is up and I should hand back to Mark. Thank you very much.
Great. Thanks, Mark, both for an excellent presentation and also for spot-on timekeeping. Really appreciate it. And I just want to reflect to confirm very much that the notion that a lot of discussion was had around some of the sort of funnel diagram that Mark presented and the sort of different approaches it draws out. Can I also remind everyone, please, to use the chat box for any clarification questions or broader comments that you would like to make as we go along, and I'm going to then pass over to James Blewett to make the second presentation.
Thank you very much, Jodie, and thank you very much to everybody for joining, and I welcome you to a romp through the main recommendations which came out of our research findings, which we talked about in an earlier webinar, so I don't intend to repeat that here. The recommendations which we've set out basically been developed in the context of the research findings and build on the operational guide. It's certainly not intended as a replacement to that guide. And I think building on what Mark has just been talking, it helps to inform a more exploratory approach with a certain level of analysis. So we looked at, our research covered 11 programs, a total of 26 interventions. And the main thing to say about all of that and the justification for what follows is that from our research sample, almost all of the sector interventions which achieved impact at scale undertook some sort of pre-pilot analysis. And of those which didn't achieve impact at scale, very few of them undertook any kind of pre-pilot analysis. So we can, I think, fairly safely conclude that there is some sort of correlation between a robust pre-intervention analysis and eventual success at scale. The guidance which we're going to set out for the practitioners in the MSD community are in the form of the recommendations which I'm going to talk about at the, now, and then in a toolkit which we've developed for those who want to take things to the next level. So if we look at the first the first recommendation, it's basically the starting point for selecting intervention should be a project and sector level analysis which identifies a co-investment space, and an intervention level analysis which identifies viable business innovation and investment opportunities. At the project and sector level, MSD strategic thinking tends to emphasize developmental over commercial interests, typically focusing on particular groups of target beneficiaries that have the potential for economic improvement, and then trying to promote commercial linkages between these groups and typically larger private sector players. And this can be achieved through a wide range of interventions, the sort of direct intervention or a broader enabling environment approach, but or something sort of more conceptual at the sector level. Having understood the economic environment, it's possible to identify which and how target beneficiaries could benefit from such growth and innovation, and to then design projects and ultimately interventions which influence investment in a way that will achieve developmental objectives. Because what we're looking at in this diagram is the private sector commercial objective, which applies equally to target beneficiaries as it does to larger companies with which you may engage on the one side, and then on the other there's the interests of the donor project, the developmental objective. So when we drill down, where we look at where these two sets of objectives coincide, we think that there are three further filters which projects would do well to apply before investing their own resources or encouraging the private sector to invest their hard-earned money. The first one is commercial viability. And this, again, just to emphasize, applies to everybody concerned, the target beneficiaries and any partners with which you're working. The first assessment of commercial viability focuses on the profitability of the proposed business innovation. Is it possible for the pilot intervention partner to transact with the target beneficiary group on a profitable basis? Then if it passes that test, we then look at scalability. Assuming that the pilot can be commercially viable, the next question is whether the business innovation is commercially scalable, whether there are market opportunities and economies of scale which will encourage the pilot partner to invest and develop the business innovation beyond the pilot intervention. And finally, and probably one of the more tricky filters, if you like, is financial viability. So for projects that pass the first two tests, the final question is whether the necessary investment and working capital finance is available on the right terms to make the project financially viable as a pilot and beyond. And I'll be returning to that theme in a later slide. The second recommendation talks about how we select intervention partners. There are three dimensions to this. Strategic fit, is the intervention, does it fit with the proposed partner's business strategy? Does the partner have the financial capability, and does the partner have the management capability? For the purposes of this presentation, I'm going to focus on the strategic fit. So what we're looking for is a viable partner business innovation strategies. If we want our partner to change its behavior, to invest their resources into doing something then that they haven't done before, then we need to be convinced and convincing that they're doing the right thing. So what we found was that there are principally three dimensions to business innovation strategies. The first one is a new product, so product innovation. The second one is entering a new market segment, so a business model innovation. And the third one is entering a new location, expanding the business or business extension. What we're looking for is business innovations which are essentially taking your partner in one of those three directions. So it's an extension of rather than a departure from their existing business. Either a new product or a new location or a new business model. Undertaking a pilot that requires a partner to innovate in more than one of these areas simultaneously, we found is much less likely to succeed. If we move on to the third recommendation, which is about market-based engagement with target beneficiaries. This is one of the key obstacles that we found to pilots scaling up and succeeding beyond the original pilot. Because pilot interventions typically promote market-based solutions targeting a limited subset of target beneficiaries, which could either be the suppliers or the consumers of a partner enterprise. And the typical approach to scaling up assumes that there is a much larger group of target beneficiaries out there who could equally benefit from the same innovation, either through expansion by the partner or through a response to the pilot demonstration by the partner's competitors. And so our third recommendation is that projects should undertake a more rigorous analysis to understand the accessible target beneficiary population and the circumstantial and the structural limitations to their participation in market systems. To help projects understand the size of the accessible target beneficiary population, we've developed a concept of the market frontier. The market frontier in this diagram is the semicircular smile-shaped barrier which runs across the three intersecting ovals. Sorry, a bit difficult to explain both without being able to point at it. But the market frontier is the virtual boundary which marks the point beyond which intended target beneficiaries are unable to transact within a given market system. So with the best will in the world, any market-based solution, it's only going to work if the target beneficiary group, if the wider target beneficiary group has the necessary capital, the necessary capacity and the necessary connections in order to engage with the market. Such an analysis, so if we find that all those three conditions are present, then we can find a target beneficiary group which is within the market frontier. If we find that one or more of those three conditions is not present, then the target beneficiary group is beyond the market frontier. And however successful the pilot might be, it's not going to scale up to reach those people. So such analysis serves three principal purposes. First, it provides a conceptual framework for scaling up strategies, allowing you to design and adopt approaches that either push the market frontier outwards or bring target beneficiaries within the market frontier. Secondly, it highlights the fact that target beneficiary population is not homogeneous. There will be different subgroups, perhaps defined by geography or infrastructure, within the overall population. And thirdly, it allows MSD projects to work on market systems likely to have the largest impact by being able to reach a larger target beneficiary population. So essentially what we're saying here is that when you look at your target beneficiary group, don't automatically assume that the target beneficiaries selected for a pilot intervention have the same or are subject to the same constraints or have the same resources as the wider target beneficiary group that you're ultimately trying to achieve through scaling up. So now we move on to the fourth recommendation, which is about understanding scale potential. Our findings basically indicated that projects don't lack ambition in their stated objectives, but rather in the practice of implementation of specific interventions. And it's here that the focus is narrowed to direct effects. We saw that there were a large number of projects which, despite the way that they were set up, despite the way that their objectives were set out, inevitably then, or somehow they ended up narrowing down onto the direct effects and reporting on those direct effects rather than looking for the bigger systemic changes. So in response to this problem, our fourth recommendation is that projects adopt a systematic way of understanding the commercial market engagement potential of indirect beneficiaries and of the competitors of the intervention partners, so that the step 2 approaches, which are set out in the operational guide, and the pathways scale can be developed accordingly. We recommend that this kind of scale potential analysis should examine three principal variables that determine impact at scale. First of all, the strength of the competitive potential among firms which could invest to develop and expand the pilot intervention. So that's the horizontal axis at the bottom of the matrix. Secondly, the strength of the uptake potential by indirect target beneficiaries that could copy the innovation. So that's the vertical uptake potential. And thirdly, the absolute size of the accessible target beneficiary group. And that's indicated by the size of the circle in this example diagram. So what we've done here is we've plotted 4, let's say, illustrative potential interventions. Project A or intervention A has a high uptake in potential. It's very attractive to target beneficiaries, but it's less attractive to the partner's competitors. But there's a reasonable population of target beneficiaries which are potentially accessible. So here we would say that you're likely to have strong direct effects but few indirect effects. In B, we have almost the reverse situation but with a slightly different population. There's very little uptake potential, but there's a strong competitive potential. And then third, C, intervention C is, if you like, the sweet spot. It has high uptake potential, it has high competitive potential, it's likely to have a lot of indirect effects amongst the large target beneficiary population. And then the opposite to that is intervention D, which kind of fails to tick any of the boxes, really. So we're not saying that there's necessarily a trade-off between commercial incentives and developmental impact, rather that MSD project pre-investment due diligence should include an explicit sector-level assessment to understand where commercial and developmental interests coincide. The commercial attractiveness of the partner, its competitors and target beneficiaries, and large numbers of target beneficiaries within the market frontier. Move on quickly, and say I apologize for the speed of this, but I'm very aware of timing. The fifth recommendation. Really here what we're trying to do is to broaden engagement to more sophisticated projects that involve higher value-adding processing or manufacturing, and interventions which ultimately rely on leveraging third-party development, impact, or commercial finance for investment and working capital, which is required to achieve impact at scale. And what we're suggesting here is that the traditional donut should be perhaps supplemented with a third segment, which is focused on finance. Now, for target beneficiaries, they typically rely on their own savings, or they rely on microfinance or village savings and loan associations. There are various sort of opportunities, finance opportunities available to target beneficiaries. For partners and for their competitors, you're looking at more sophisticated financial needs, which might be in the form of equity finance or debt finance from commercial lenders or from development financial institutions. But the important thing is we think, to map these factors at the same time as doing the market analysis, because we think that finance plays a key role in the functioning of market systems. We're putting this third segment in because we think that finance forms an integral but clearly defined function within market systems. It's integral because MSD projects are concerned with finance to the extent that it allows or constrains investment and transactions within the market system, rather than being concerned with financial markets in a broader sense. But secondly, it's distinct from other supporting functions because it performs multiple roles in providing the means for investment and transactions, and it's typically highly regulated and is performed by specialist firms and institutions. So we therefore recommend that market analysis should include a more detailed look at the finance function within the market system in order to inform the selection, design, and implementation of projects and interventions. Such analysis would allow projects to understand the sources, availability, and cost of investment and working capital finance required if the intervention is to achieve impact at scale. So the kind of questions that you would be looking at here are there finance providers willing to invest or lend to support the level of investment required by the partner and the partner's competitors? Are the costs of investment finance justified by the returns on investment? How will the business innovation impact working capital requirements for the partner, and how can working capital be managed most effectively? And so on and so forth, a number of different questions. The final recommendation is, and I'm afraid I haven't got a diagram to go with this, so I'll just briefly talk to it, is about portfolio management and adaptive programming. We think that it's important that MSD projects view their results as a portfolio of sector interventions, balancing the allocation of resources, the risk profile, and the expected developmental returns, and subsequently measuring direct and indirect results across sectors, rather than looking at the direct effects of individual interventions. So this is very much a sort of commercial approach to investment portfolio, but in a developmental sense. And secondly, we recommend that they adopt an adaptive approach, using the initial analysis as a basis for experimenting with and learning from alternative approaches, the iterative bit at the bottom of Mark's diagram. And we think that this will be particularly useful in informing step 2 supplementary intervention stage. And finally, for those who want to take these ideas and actually apply them in practice, we've developed a toolkit which is going to be published very shortly, which turns these recommendations into practical steps that projects can use. There are 4 areas that it covers. We call them the 4 Ps. There's a project due diligence, which is about the business innovation itself. Is it an attractive investment opportunity for the private sector? There's the partner due diligence. So is the partner that you're proposing to work with, are they able to adopt the business innovation and adapt it beyond the pilot intervention? And then the important bit from a developmental point of view, the people due diligence and the potential due diligence. The people due diligence looks at basically, is the business innovation going to make a significant difference for a large number of target beneficiaries? And when we're talking in the last area, the potential due diligence is really about the systemic potential. And are there competitor enterprises and indirect target beneficiaries ready to expand the business innovation? And there are a whole bunch of tools in that toolkit that practitioners can use to inform their analysis. And that is that. Thank you very much indeed.
Great. Thanks so much, James. It's all a bit of a romp, as you say, both presentations, and I feel to be the guilty party as I've been pressing everyone on time. But what we're going to have now, Bill Grant will provide some reflections from his practitioner perspective, and I think hopefully help us to make a bit of sense of a lot of ideas that have been thrown out there. I think also we'll raise some challenges or questions for James and Mark before we come to the sort of Q&A part. So hopefully it'll give you all a bit of time to collect your thoughts as well. Do continue to make your comments in the comment box. Thank you for those who've already been asking questions. We've tracked those and we'll come back to them as soon as we've heard from Bill. So go ahead, Bill.
Okay, thank you very much, Jodie. Can everybody hear me? I guess that's the starting point. I hope you can. So I really want to thank James and Mark for presenting their research, which I thought was, very useful and provides a lot of food for thought. It's also very complementary research. The first was more how do you get to the intervention, and I think when Mark kind of highlighted just how much there was of the exploratory and not really doing deep analysis, and then you come to James's work that says actually most of the projects that succeeded were ones that were based on solid analysis, does imply to me that it's very important to have good analysis at the base of your work. But also that we need to engage very carefully and extensively with our partners to come up with the right interventions that address the root causes in the sectors, but also provide a real sound value proposition to all players, not just to our, if our target beneficiaries are farmers, or if they are, big companies, but that both sides win, and there has to be a good rationale for both of them. And I think that James highlighted that. So if the sector is going to grow, there must be mutual and shared benefits to all parties. And, as you're doing your work, we obviously need to be aware of all the external elements that can affect that. And so I think as we plunge into our interventions, we really have to have a sound analytic underpinning. Over the years, for the last 30 years, I've encountered a lot of people who kind of have a solution in search of a problem. And they come in and they say, well, this is what we're going to do. This is how we're going to do it. Now, where can we do it? Some of you may remember there was about a 2 or 3 year long webinar that ran on value chains run by SDC. And a lot of people had the just do it approach. which said, well, just do an intervention and see what happens. And unfortunately, I've always found that, and I think James's work kind of highlighted this, is that if you haven't figured out kind of the bigger picture and where the problems really are, that just going in and trying something, it may be interesting, but it may be in a completely irrelevant area. I think Mark's work showed that ultimately our work in market systems development is about behavior change. And so understanding the current situation, why people do what they do, is the critical first step to anything. This does require both a participatory and an analytic engagement. And so you have to work with the partners, or the participants in the sector. It can't be purely analytic, but nor can it be purely participatory. Because ultimately I find that many of the participants in the sector will not know all the problems that exist beyond their frame of reference. So as I was thinking about these papers, then three things really stood out for me kind of from the learnings of this. How do you do the analysis, and then how do you actually design the interventions, and how do you engage with people? And I think those three things are, it's about, first of all, the people. Who are the people on our teams who are doing the work? I mean, just my experience, my projects work best when I have the right people. I have people who have experience in critical thinking and looking at the analysis and trying to understand why things are important. They also have to have the ability to engage with partners and to influence them, to be able to say, well, what are you doing? Why are you doing it? And can we think differently? Let's explore different opportunities. But they have to have those opportunities in mind. They can't just kind of come in and be blindly, tell me what you want to do and we'll do it. So they have to have a clear vision on the possibilities of the future and many of the different paths to get there. So the first and really critical thing is the people. And that was something that was actually missing in both, was, in James's work, he looked at the analysis, but he didn't actually kind of reflect back on the softer side of the successful interventions as to what was the quality of the people doing the work. So the second thing that really stands out is the quality of the analysis. And I do see that, analysis is at several levels. The first is understanding what is happening today and why. What is the big picture? What's the overview of our subsector? Where are the poor in our subsector? Where are the big companies? What are the interests? What's changing? How is the sector evolving? What does our analysis tell us about the way things have changed over the last 5 or 10 years? Because that will indicate a lot about where we're going in the future. And what are the major constraints we need to overcome? If you don't know that before you start to engage in the sector, it will be very difficult. And I find that when projects have a solid understanding of those issues, they can move on to addressing the underlying problems and end up finding better, more appropriate interventions and being able to engage much more effectively with the partners. James highlighted the size of the sectors. And if you can't engage with your partner and tell them, gee, there's a potential $6 million market out here, for example, and you've got $100,000 of that and you think you're doing really well, well, think again. And that is a major problem, that there are information asymmetries, there's lots of missing information, that we as projects should be able to do it. And the third piece of the analysis is the quality of the intervention design. What process have we used to figure out what we're trying to fix? And Mark highlighted this. And understanding the behavior of the market actors. Why do they do what they do? Because ultimately we want to change. If things are going to change, the market actors need to change, both at the quote beneficiary, either producer or consumer level, or the processor's large company. And then I think the other program, the two studies both highlighted the importance of the partner and partner selection. And a third really key piece of this is also, and I talked about the quality of the people doing the work, the quality of the analysis. It's also the quality of the donor. What is the right role for the donor to play? And I think that a good donor for a market system development program, which needs to be flexible. I mean, it is not a prescribed, on day one you do X, on day two you do Y, and 3 years from now you will be doing something concrete that's predetermined. It will change. And so they need to have a clearly defined objective and understand how and why it could be achieved, but then they need to step aside and then let the team focus on it. I think Mark highlighted this in his work. So another big challenge I've found is that donors oftentimes set unrealistic targets. And I've had a lot of engagement with them, say, well, why did you choose a target of 300,000 or 400,000 people to be reached in this 3.5-year project? And they, the response oftentimes was, well, we have evidence from a couple of projects, which inevitably get quoted, which are PropCom and Catalyst, without their having really understood that these are projects that have been running for 15 years, and it actually took them 7 or 8 years to get real traction. And so in setting targets that they want to have achieved in a much shorter time, yes, we can do things much faster now. We don't have to wait for 7 or 8 years to get the traction, but it still takes a couple of years to build the relationships, to get to know the players, for the players to trust you, and to move through the pilot stage. You're not going to jump from 50 or 100 beneficiaries to 10,000 or 100,000 beneficiaries in 1 or 2 years, unless you've got something really extraordinary going. And then, the other piece on the donors is just to not be overly burdensome in micromanaging. This is something that needs flexibility, and if they want the perfect solution, they do have to be willing to experiment, to try things. I remember 2008 having a really good discussion with some DFID staff in Kenya, and that's when we first said, well, what you really need is a portfolio approach. You can try, have a clear picture of where you want to get to, try lots of different things, and as things fail, let them get rid of them quickly, and then reinvest in those that are working. So, I think that it's really important to have that flexibility. I can't see the screen, so I hope I'm not going over. But so my question for both James and Mark, just to kind of kick things off, is, what evidence did you see the importance of a strong understanding of the overall subsector? Because there are competing channels. There's large commercial, there's smallholder, there are big farmers versus small farmers. Understanding the major market trends and subsector dynamics and drivers in the successful, I guess on James's work on the successful implementation, and on Mark's work on coming up with what you thought was a sound design. So with that, let me sign off. Jodie, over to you.
Yep, perfect, Bill. Thank you very much. And you were perfectly on time, so we've had a great panel today. So thank you very much. Before we leap into, or before I ask Mark and James to respond to that challenge or question that Bill has put forward, I wanted to check if there were any clarification questions. There's perhaps 2 that I picked up on in the chat box, so I'll perhaps put those forward now, and then check if there are any others, and if not, we'll come to Bill's question. The clarification question that I picked up, firstly from Mark, I think James Holden had a question around analytic and exploratory. He had a 2-part question. One was kind of about which do you think is better, but even before that, I think there was a clarification that would be useful. He notes that perhaps exploratory is a generous description of how some of the projects act, that it implies learning by doing with an active approach to learning, but the research suggests that some projects simply act on the basis or are based on the need to act and the need to spend. So should there be a third way here, action, that's more than just action rather than exploratory, or where's the boundaries between exploratory action or exploratory as action and learning? So do you want to just clarify your typology before we leap into perhaps the more fundamental question of or debate around which is better? Mark, that was directed to you. You're on mute if you didn't realize.
Hi. Okay. Sorry, I clicked twice. I would like to stress on that it was a challenge to come up with the right term. We were not looking at specific projects necessarily. Our research was focused on practitioners who could talk, generally or about a specific project. We were asking them about, how they went about it. I mean, I think that on the ground, there is every kind of approach to piloting, and I'm not even sure that people would necessarily have thought it through in the kind of terms that we've come up with in this analysis. So I think the value of this research was to sort of highlight the need to be much clearer about what you were piloting and why you were piloting, and whether it was really an experiment or whether it was just to do some action research and get going, or whether it was in a context where it was very, very hard to find anything to do and you wanted to start off and do something with somebody. So, we can go into our own ideas about what it should be, and I have my own view. But what we're trying to report here is that it was quite a foggy area between opportunistic and experimental or action-based or whatever you like. And we really didn't want to lead in our interviews with the practitioners. So, we probed a bit, but it was really recording what we were told.
Great. And the other, I think, more of a clarification question was from Francois Philippe Dubé for James Blewett and James Keddy. A question that, could you give an example of a successful intervention that achieved scale? So perhaps I'm reading between the lines, or hopefully not putting words in Francois Philippe's mouth, but I kind of got a sense of, well, here's a lot of really nice theory about how things should go, but what examples are there to show this in a slightly more practical way? I note that there was also a related question from Chris Masilla, but slightly different, about an example of a project which achieved both donor objectives and private sector commercial players took it up. And James Keddy has started to respond to that in terms of mentioning Smeets, if I'm possibly mispronouncing that, in Yemen, and a new inputs in irrigation and greenhouse technology introduced to small, medium horticulturalists. But that to date such examples are relatively rare. But I just wanted to check with you, this notion of we've got lots of theory, but did you find an example you can point to of achieving scale? Are you saying the Yemen example is the example, or is there anything else you would point to?
Yeah, Jodie, thanks. I can give one very specific example from my own experience from Afghanistan, where we were trying to address failures in the healthcare market. And one of the big issues in Afghanistan is the prevalence of counterfeit medicines, which were being sold through pharmacies or in Afghanistan. And poor people were particularly vulnerable to that because of levels of illiteracy, lack of education, and just general vulnerability to, let's say, snake oil and charms and all the rest of it. And the intervention that we supported was basically to introduce a branded pharmacy which was targeting poorer consumers. And the original intervention was a direct intervention. It was through a challenge fund in this case, but it didn't necessarily have to be with the challenge fund actually. But what it was about was introducing a branded pharmacy that guaranteed that medicines were genuine and that people could rely on them. That project was started off at a pilot stage by the Afghanistan Business Innovation Fund, and subsequently it expanded beyond the pilot and beyond the support of the project, and then attracted private equity financing. And to date, I was just looking at the website the other day that they've now got a chain of 20 pharmacies operating across Kabul selling genuine medicines, particularly targeting poor people, but not exclusively so, it has to be said. So there's been a bit of drift on that, but it's certainly achieving its fundamental objective. And the other thing to say is that the private equity, there's been an unexpected effect on the private equity side, because the private equity fund themselves, partially off the back of this intervention, then managed to raise further finance, and they are investing in other growth projects in Afghanistan. So that has really had indirect effects both within the sector and across other sectors. And
are you saying that
what I would say specifically? Sorry.
No, I was just going to ask, would you say that that example that relates to the pre-investment due diligence that was involved in that? Or is that what you're suggesting?
Yeah, and I think it goes back to Bill's point, which is that understanding things at the sector level are absolutely vital. I mean, this really was a systemic failure at a sector level which presented a business opportunity. You know, the systemic failure was one of poor regulatory supervision and a lot of people taking advantage of it by selling out of date or just plain counterfeit medicines. There was a huge market opportunity for somebody who was willing to introduce a business innovation, in this case branded pharmacy, a pharmacy chain that people could build a trust in and could use, confident that they were buying a genuine product. And it has to be said that alongside the original pharmacy chain that was supported, a number of competitors have sprung up offering similar services or copying different aspects of the business model that the chain itself introduced.
So is it then with that, I guess that's in a way is your response to Bill's provocation about the major subsector or market trends and how those should fit into the analysis that you're describing.
Absolutely essential. I mean, it's the foundation of everything. If you don't understand where the sector, how big the business opportunity is, then it's very difficult to engage with private sector players within that sector, and in a convincing way, because part of the facilitation role, if you like, is to highlight the business opportunities. So you need to do that from a position of knowledge, not just based on, finger in the wind or hope and optimism. You've got to have real numbers that you can put in front of real investors.
Great. And Mark, perhaps turn that question then to you. Bill's question about the role of understanding of the sort of major subsector and market trends in terms of your analysis around analysis to intervention design.
Okay, so I mean, what I have to say is that from the respondents in the research, this was not. It was not raised as an essential underpinning. I think there are reasons for that came out, or possible reasons, where a lot of people were talking about the complexity of markets and it being difficult to understand them. I think other people raised the issue about the team, and the team didn't necessarily have that capacity. Sometimes their I think there were issues where the market analysis was undertaken by maybe a short-term person who came in and left the report behind, which is never quite the same as being involved in it yourself and really understanding. So from the research, from the respondents, this did not emerge as a key underpinning. My own view is that it is absolutely, I agree with James and with Bill, that it is essential to know where you're playing, as it were.
Thanks. I think we can now sort of move into the broader questions. We've got about 10 minutes left. And I suggest perhaps it would be useful to tackle that elephant in the room, I think was one of the terms used about, at the end of the day, it's fine, there's all this stuff going on. Bill's made a strong case that you need both both the exploratory and the analytic approach. But I think there's still perhaps some skepticism and some challenge about that, and a sense, and I'll use the question, the second part of the question from Joseph Holden, who said the process diagram suggests, from Nathan and the team, process diagrams suggest that either approach taken will lead down to the bottom and behavioral change and systemic change. Both approaches can't lead, surely both approaches can't lead to the same endpoint, although is the diagram simply saying that is the goal? Either way, have you a view? So I think, Mark, you've sort of made it clear that what you've been trying to do in the report is give us a picture of how programs are doing this rather than impose your views. But Joseph's challenge is, what is your view of which of the two approaches is better? Or is there actually a perfect middle ground that you're pointing to? I'd also throw into the mix a question. We had some questions sent in before the webinar started, and one that perhaps fits into the same category from Yassir Arafat of the International Rights Research Institute, who asked, do we need to involve private and/or public sectors at the time of the initial analysis and research? So that's perhaps pointing towards a participatory approach. I'm perhaps again putting words in his mouth, but just a little bit further debate about, is it analysis or is it an experimental sort of approach that we are advocating, or that you are advocating? Mark first, but James, you may also have views on that.
Okay, so I think that I don't want to duck out of this, but I don't think it's it's just all one or all the other. And I don't think it's that there's it's going to be a new orthodoxy that this is how you do it. I mean, the earlier steps there, the issues that you're dealing with in terms of context and modalities do have a role to play in determining which approach you need to use. And I think the context one is particularly important. I mean, if we're working in very difficult situations where very thin markets or very weak private sectors, we're going to have a different approach than if we're in a more developed market and we have a very clear idea of what we're trying to do and who we're trying to work with to achieve something. I do think, though, it's absolutely essential that the team does have this bigger picture of what is possible, what the potential is, where they're going to get there, bang for the buck, what the systemic change you would dream of is. What you're trying to, what it would look like afterwards, if you succeed, and that has to be held by the team very clearly. And to have that, they need to have an understanding and an analysis undertaken of that. So to me, that has to be there. And then in terms of how you get there, I do think you can be more experimental and exploratory in engagement with your stakeholders, because your stakeholders are what you've got. And you don't stop the analysis as soon as you start the implementation. You do have to have the learning part to it, and it does require a lot of skill, and it does require in-depth engagement with those partners you are working with, constant feedback to understand, did you have it right, have you got it wrong, you need to change direction. is this intervention actually delivering, or is it going off in a different direction? And that whole proactive role of the team in doing the thinking and understanding cannot be underestimated. So to add to Bill's point, I mean, we didn't really cover the team, and the team's been covered many times before in work on market systems approaches, but the team has a key role to play. We presented a kind of full spectrum of these approaches, and I think there is probably a thinner channel down the middle, but it still has some variation within it, which will depend on the context in which you're operating. So I would say that.
And Mark, I'm wondering, similar to an earlier question about, well, this is kind of fine in theory, but do you have a practical example? Is there an example you can point to that brings to life some of the points you were just making?
You're putting me on the spot there. I mean, I think that an example of, there are examples where I think the fact, in our project in Ghana, we have a local team fully engaged from the beginning, fully engaged on the analysis of the systems, fully engaged in the program design. We have, the team has stuck with it. We've been able to adapt and add to interventions with a clear idea of the model that we're promoting and where and how far it could get. And this one based around an aggregator business model at the heart of agricultural transformation. So I think that's, in that program, I could apply this, I could work out where we fitted in this continuum and be happy with the approach.
Thanks. James, I don't know if you had anything you wanted to add on that point. I think Bill did have something to come in as well. So, Bill, maybe I'll ask you, Bill, first, just because perhaps it follows directly on from what Mark said, and then James, your comments.
Sure.
Yes, thank you, Jodie. No, I wanted to agree with Mark. I mean, the context, we talk about the weak market context versus the strong market context, and there was a lot of discussion, what's the right facilitation approach? Is it the heavy hand or is it the light touch? And those really come into the context of the system within which you're working. I'm in Mozambique right now, and 7 years ago when we started, there was almost nothing happening in northern Mozambique, and everything was really being pushed and driven very hard by the donors. And we started working with a few large corporates. There was complete agreement. They wanted to get into these sectors, and they had big initiatives, and then their corporate strategies changed. So beyond our intervention, even though it was getting traction, just at a broader level, their corporate strategies changed. However, in that process, we had learned a lot. We had a clear rationale for why we were working with those people and in which sectors and what major problems they were trying to address. But the interventions actually changed radically after the corporate partners changed. But I would say that right now we're having even greater traction and things are moving far beyond what I ever expected. And we've done it actually with almost no money in a very weak market environment. But just by having the right team leader who could engage with the key kind of major private sector actors and get them to buy into a common vision for what the sectors could achieve. Thanks.
Thanks. And James, we're rapidly running out of time. You have 1 minute maximum.
Sure, I'll
any additions?
Briefly respond by kind of giving a slightly different take on the whole thing. Rather than thinking of analysis or experiment as alternatives, I think that analysis can inform your experiment. And this is one of the big learnings, I think, from our research, is that any pilot is an experiment of sorts, right? however much analysis you do, you're never going to find the perfect solution and get it right every time. So, but I think what analysis can do is inform your experiment so that your experiment is more likely to work. And I think the kind of analysis that we're talking about, this more commercially focused analysis, really plays to the economic realities, the kind of economic analysis that Mark was talking about, the sector level analysis that Bill was talking about. Yeah, and then what we're trying to do is take it into the intervention level and say, before you invest your own precious project resources, or you try and motivate a private sector player to put their own money and their own management time and effort into a project, you can undertake some fairly basic but quite illuminating steps which help you to increase your chances of success quite dramatically. So we're not saying don't experiment, but we're saying do the right experiments, or do the experiments for the right reasons.
Great. Well, I think that was actually quite a useful way to bring together all the different perspectives and sort of give us a summary of the takeaway, perhaps, of the webinar. So thanks very much to all of the presenters, Bill Grant, Mark Thomas, James Blewett, also James Keddy for your input via the chat box. Thanks everyone for participating. Really appreciate it. Sarah's been adding links into the chat box about where you can find the different resources that were added to the the different resources that were referred to during the webinar. I think also we've done a pretty good job of covering the questions, but I think there have been a few that we haven't managed to cover in the time we've had. So I think we can pick up using the Beam Exchange LinkedIn group, just those couple of questions that we didn't perhaps quite get round to. So hopefully the speakers are agreeable to that, and Sarah can provide some, has provided now the information of where you can get to the LinkedIn group. Otherwise, thanks also to Sarah for her support, and thanks everyone for your participation, and have a great rest of the day, whatever time zone you're in.